Two banks already collapsed in 2025. And the warning signs everyone ignored in 2008 are back. Here's what the data is screaming. Shadow banking just hit $250 trillion. That's 50% of the global financial system operating outside traditional regulations. Private credit firms like BlackRock, Apollo, and KKR are acting as banks, but with zero oversight. And it gets worse. Banks have $4.5 trillion in exposure to these unregulated hedge funds and private lenders. That's 9% of their entire loan book tied to institutions that don't follow banking rules. The Bank of England governor just warned this has worrying echoes of 2008. The IMF chief said it keeps her awake at night. But here's the part that should terrify you. Consumer debt just crossed $4.5 trillion. Auto loan delinquencies match 2010 record highs. Credit card defaults above 10%. Student loans 30% delinquent. Vehicle repossessions at highest levels since 2009. These aren't random numbers. These are crisis levels. And regional banks are getting crushed. Stock prices falling. Loan defaults rising. Some restricting withdrawals and imposing unusual fees. That's liquidity problems. Banks don't have cash to meet customer demands. The FDIC already stepped in for 2 bank failures this year. But here's the trap. FDIC only insures up to $250,000. If you have more, you're exposed. Meanwhile, U.S. national debt hit 121% of GDP, up from 62% in 2007. The government quadrupled its debt responding to past crises. Can they even afford to bail out banks next time? Economists say no. Trump's tax cuts will push deficit to 9% of GDP. Debt service alone costs 4.5% of GDP. That's higher than any developed country. Translation: when the next crisis hits, the government is broke. No bailouts. You're on your own. And the timeline? Private credit firms, First Brands, and Tricolor just collapsed. Banks like Jefferies and UBS took massive losses. The contagion is starting. Here's what Wall Street knows but won't say. This isn't if banks collapse. It's when. The system is more interconnected than 2008, but less regulated. Shadow banks made risky loans. Traditional banks financed the shadow banks. Now defaults are cascading through the entire system. Your deposits are the collateral holding this together. And when confidence breaks, bank runs happen fast. Comment 1 if you're moving money to multiple banks to stay under FDIC limits. Comment 2 if you think this is fear-mongering. Comment 3 if you're buying gold. Because right now, the data says we're in the red zone. Rapid credit expansion always precedes financial crises. We're past the warning stage. We're in the danger zone.